Good morning. When we prepare a cash flow statement, we have to show the effect of inventories, debtors, and creditors on the cash flow statement. So the current assets and current liabilities. What was the movement between the previous year and the current year? So we have to look at the information that's given to us in the balance sheet or in the notes. Now, if we look at this information, the inventories is given in the balance sheet, so it means there was no note for inventory. When we look at the balance sheet, there is an entry for trade and other receivables, and there's an entry for trade and other payables. Now, if we look at the trade and other receivables, you will see that there's a trade debtors, then SARS income tax and prepaid expenses for interest. It is very important to distinguish which figures should be taken into account to determine what was the movement for debtors. SARS income tax is shown separately on the cash flow statement, where we show what was the inflow outflow as a result of income tax paid. Interest is also shown separately on the cash flow statement, so the inflow or outflow of interest is shown directly on the face of the cash flow statement. So if there is a prepaid expense for interest or there's an accrued expense for interest, you will not take it as part of the debtors and the creditors. If you have accrued expense for something else, like for instance telephone expenses, then you will take that into account with your creditors. So it's very important to remember that prepaid expense and accrued expense for interest will not be taken into account with your debtors and creditors because the effect is shown separately on the face of the cash flow statement. If we want to calculate what is the result of the movement of inventory, then we look at our inventory figure and we determine whether there was an inflow or an outflow from the previous year. So in 2014, it was 453,000. In 2015, it's 394,000. That indicates to me that the inventory decreased from 2014 to 2015. Now, why did inventory decrease? Because we sold some inventory. If we sold inventory, it means that there was an inflow of money. So where I determine whether there's an inflow or outflow, I will subtract the current year from the previous year to determine what is the difference or the movement between the previous year and the current year. And that will give me 59,000. Then before I determine whether this is an inflow or outflow, I must think logically. So if the inventories decrease, it means that we sold inventories. And if we sold inventories, it was an inflow of money. That's why this 59,000 is positive. If the inventories increase, it means that we bought more inventories. And if we purchase more inventories, we have to pay for the inventory. Then there will be an outflow of money. So if the current year is more than the previous year, more inventory was purchased, and that caused an outflow of money. If we look at the trade debtors, we determine that the previous year the debtors was 916,000. In the current year the debtors is 740,000. That means that my debtors decreased from 916,000 to 740. So the movement between the previous year and the current year was 176,000. Now, why is the debtors less this year than the previous year? Because they paid money so that they can owe less money. If they paid money, it means that there was an inflow of money because the business received the money, and that's why this 176 will be a positive figure. If the debtors increased, it means that they didn't pay. And that means the business had to finance them to buy goods on credit, so they owe more money to the business, and for the business this caused an outflow of money. We will not take SARS income tax and prepaid expense interest on loan into account because that is shown separately on the face of the cash flow statement. If we just look at all the other entries that can appear under debtors, if you say that prepaid expenses increase, then it means that the business paid additional expenses during the year for the following year, and that caused an outflow of money to pay for this additional expenses, so it will be a negative figure. If there's a decrease in prepaid expenses, then the business paid less money for the future. That didn't cause an outflow of money, so it will be a positive figure. If there's an increase in accrued income, then it means that you didn't receive all the money that you were supposed to receive, so there was an outflow of money. If there's a decrease in accrued income, then less money is outstanding, so more people paid their money in the current year. That caused the inflow of money, so it will be a positive figure. If you're unsure how to think out the prepaid expenses and accrued income, you can think of it in exactly the same way as the effect that it will have on debtors. So if I say debtors increase, then I say that we paid to finance them. That caused an outflow of money. If accrued income increased, then it caused an outflow of money. If debtors decrease, it means they paid, so there's an inflow of money. If we look at the accrued income, if there's a decrease in accrued income, we think exactly like we think for debtors, and we say that means it is an inflow of money. It is very important to look at the SARS income tax amount and realize that it will not have an effect on the debtors, because SARS income tax is shown separately on the face of the cash flow statement to show what was the outflow of money as a result of income tax. So SARS income tax will never be added to the debtors figure. Prepaid expense in connection with interest will not have an effect on the money from debtors, but it will have an outflow as a result of interest paid. And that is also shown separately on the face of the cash flow statement. If we look at our creditors, we must determine whether the creditors increased or decreased. So we will look at the creditors for the previous year and for the current year. And if we do that, we see that there was an increase in my creditors for the current year. So that means that we owe more money to the creditors, so we didn't pay the creditors, and that's why I say it was an inflow of money. If my creditors decrease, then I owe them less money because I paid them. And if I paid them, it caused an outflow of money. Accrued expenses for telephone or for water and lights or stationery or whatever expense you paid, if accrued expense increased, it means that we didn't pay that expense, so the money didn't go out of the business, So that gives us an inflow of money. If accrued expense decreased, it means that more money was paid that caused an outflow of money. So the money went out of the business so that we owe less money to other people. If income received in advance increased, it means that we received more income. So it means there was an inflow of money. If income received in advance decreases, it means that we didn't receive the money, so it is an outflow of money because we financed the other people. So we will think of the effect of accrued expenses and income received in advance in exactly the same way as we will show the effect on creditors. If creditors increase, it is an inflow of money. If income received in advance increase, then it's an inflow of money. If accrued expense increase, it is an inflow of money. So you can think it out exactly the same as you would think out creditors. It is very important to take into account again, if there's a SARS amount for income tax, it will have no effect on the creditors because the outflow of money as a result of SARS will be shown separately on the face of the cash flow statement. Accrued expense for interest will also not have an effect on the creditors because it will be shown separately as an outflow of money as a result of payments of interest. What did we learn today? If assets increase, additional assets were obtained and that caused an outflow of money. So if assets increase, additional assets were obtained, caused an outflow of money. If assets decrease, assets were sold, that caused an inflow of money. Assets decrease, we sold some of the assets and money came into the business. If liabilities increase, additional debt was obtained and we borrowed money, we owe more money to the creditors or we owe more money to the loan, and that will give us an inflow of money. If liabilities decrease, the debt was paid, so we paid the creditors, that caused an outflow of money.